Hello, I'm CastAwayTrader and welcome back to my YouTube channel. If you don't know me, I trade for a living and I help other traders to trade better, to start making money. And before we start, I want you to read that important disclaimer. And here we have another page. Thank you so much and let's get started. This is my website. It's located at www.castawaytrader.com. Here you can start your 15-day trial just clicking here or there, or alternatively you just can start by creating a new free account. And if you create a free account, you will be able to get several updates a day. I post for free, and in addition to that, you will be notified to your email about all new videos I publish. Okay, why I want you to give me your 10 precious minutes. I'm gonna explain you what is beta Elliott wave series, what fractal forecasting is, and those names may sound fancy for you, but I'm gonna show you how you can use a simple set of rules and fractals, repeating patterns, to forecast big rallies and big drops in the markets days ahead. And the most important topic of this video would be when this rally, this bounce of the bottom made in the mid-March will finally top, when it's time to sell it. This is the 5-wave up fractal. Fractal meaning a repeating pattern. You can find that pattern in any market, in stock, in futures, in cryptocurrencies. And if you want to read more about the classic Elliott wave theory, about the modified and better version of the Elliott wave theory, you just need to go to my website on my home page and you will see a link to my article. So just click read more and you will know more. In addition to that, I want to explain you what fractals are, how you can use them in trading at the very same homepage of my website www.castawaytrader.com. You just click read more or you click that photo and you will get to that article. Just email me if you have any questions. Okay, let's look how is the same 5-wave up fractal on a bigger scale played out in S&P mini. So this is ES mini daily chart, and that 5-wave up fractal started in 2009. We got ABC of wave 1, corrective wave 2, corrective, that means market moves counter trend. It's like a temporary pullback, and another push up in subwave A03. So let's look at the fractal. This is ABC up, followed by ABC down, wave 2, the next leg up, subwave A03, ABC down in subwave B03, ABC subwave B03, and this is the strongest part of the rally, subwave C03, and this is exactly what we got in February 2020. Let's come back to the fractal. This is that top. Once we top in that major wave 3 up, we should expect a corrective wave 4, which has to be subdivided into ABC. As you can see, all waves are ABC. This is why it's so simple. You need to know 3 letters. Everything moves in 3 moves. ABC up, ABC down. This is that simple, and believe me, only simple things work in that life. Elliott wave theory was invented in 1930s and with several modifications is still alive, and it still helps many people like me make money in the market. Okay, so what we got? Of the top made in February 2020, we got a really strong drop. And as I mentioned, normally any corrective move down, and this is in my opinion a corrective move, I do not think that the market has topped. I think it's only wave 3, and after a corrective wave 4 we would get another push up in the very final wave 5, and that would complete the rally that started in 2009. But look at the chart. You can see that every single corrective move down was subdivided, was structured as ABC. ABC, we see it's a counter trend move. Even that one, ABC, let's talk about bigger one, ABC. Remember the top we made early September 2018, and for the following 3 months the market was moving down, and we got that ABC move down, which finally bottomed in late December 2018. This is why I do not think that drop we got was all of the correction. Let's move on. As that fractal shows you, a corrective wave fall down, this is a big corrective wave fall down, has to be subdivided into ABC. So after the first move down in subwave A, the first segment, we should get a corrective bounce in subwave B. And in my opinion, the rally we have been watching since March 21st was that kind of rally, that was a corrective bounce, and many traders call such a bounce dead cat bounce. Okay, we gonna work with that part of the fractal. This is the main fractal which we can find in trading markets, which is proposed by the harmonic Elliott wave theory, which is the modified and better version of the classic Elliott wave theory. Now we need to see more details, and this is how the same fractal, the one which was shown here in the yellow box, looks like with so many details, and I'm gonna show you how I used that fractal. I actually use it on every single day. I post it in my premium trading chart, and I keep showing to my subscribers where we are on that fractal now, how ES mini or NQ mini are aligned on every single moment with that fractal, and later in this video I will show you how I do that. Okay, if it was the top made in February 2020, and if we got the drop into the middle of March 2020, we had to be in that black rally, and that black rally is a corrective rally. It is structured as A up, B down, and C up, and once that corrective bounce is completed, we would get another leg down, and that leg down would most likely drop under the low made in mid-March 2020. So let's see how it works in the real life. This is the 4-hour chart of ES mini covering the period from 19 to 2020. This is the first move down, ABC. Look again, ABC. This is all you need to know to start learning the harmonic Elliott wave theory, that the market never makes moves that shaped as straight lines. It's always like zigzags, ABCs. We got that ABC down off that bottom. We were expecting to get ABC up, as it is shown on that fractal, ABC up. Okay, let's zoom in to 60-minute chart of S&P 500. We got A, B, and C, and this is the forecast I posted on March 21st on Saturday. So my expectation was that first S&P 500 would reach 2,550, and second it would reach 2,840. It's a very important chart, because you see here it was 2,300. As you may know, S&P managed to drop another 100 points, but you know what happened next? We first tagged 2,550, and finally we have approached my second target. If you want to know how I made that forecast and what kind of fractal I used, I would recommend you to watch that video I posted on Saturday, March 21st, and it was called Can S&P Rally When You Feel So Scared? Let's assume we are here. This is March 23rd, 2020. We need ABC up. And this is the chart I posted on Tuesday, March 31st, 2020. As you can see, it shows that it has already made the first leg up. I showed you that my first target was 25.50. In fact, it moved even higher to 26.20s. But as I mentioned, every single move, either up or down, should be structured as ABC. We got that A. Market does not move in straight lines. Once you get A, you need to expect B, that B, and that B normally is itself structured as ABC. Look, A, B, what is missing? C is missing. Subwave C is missing, and that's why I posted bearish forecast for my subscribers. And That is the fractal, the very same fractal, and I expected that move down, and this is the chart I post for my subscribers, both on my subscribers to my website and subscribers to my premium chart. And this is how I show how that specific fractal of a corrective structure is aligned with S mini and NQ mini at the moment I post new updates. So they understand not only what would be the direction of the next move, but they understand what would happen after that next move. So what we should expect, and here it was clear once it drops down, that would be a great long opportunity. And let me show you how it played out. It played out actually really well. You can see that the market dropped 200 points in a matter of basically 2 days. And I posted another forecast. I said, okay, once we get A up, B down, we need to get C up. And we can make several projections. And I predicted a strong rally to 2780. You see that green line. This is another trick I do just to give better idea to my subscribers. From time to time, not only I add those labels, I literally draw lines so we would better understand what I mean. And my understanding here, my expectation here was that the market is gonna rally hard to 2780. It was Thursday, April 2nd. Let's see, Thursday, April 9th. And we got it. This is the line, and this is the rally. And we are at 2780. Doesn't look great. It looks amazing in my opinion. I have tried so many techniques in my life. I wasted thousands of hours coding different indicators. Never I could find anything as efficient as the harmonic Elliott wave theory. Actually, it's simple and you do not need to spend thousands of hours. You do not need to actually steal those hours from your family. It will take much less time to be proficient in that technique. Okay, what's next? Before we go to the point where I'm gonna share with you my expectation about the next move in the market, let me show you again how my website works. So this is the home page of my website. You go to home page. I have a subscription service. Every day from 8:30 a.m. until 11 p.m. I post regular updates about ES mini and Q mini, about natural gas, crude oil, gold and gold miners. You can start it by clicking here, and by subscribing to a standard plan you will get updates posted on the website. Or in addition to that, you can get access to the premium chart, so you pay $49.99 for 15-day trial. My premium chat room is called premium for a reason, because not only it gives you access to the website and all the updates, but you actually get a chat with peers, and with me you can ask me any questions during the trading hours and even after hours. This is where I post much more updates. I post them more often. I can post something which you are looking at. For example, you think that some stock looks great, and I will give you my understanding whether it makes sense to buy it or not. And I share a lot of psychological tricks, because trading is a game of psychology. You have to know how you need to find the right mental state to make money in trading. Let's come back to the main question. So earlier I showed you my forecast from Thursday, April 2nd, and this is where I forecasted that the market would reach 2780. So now it's here, and you can see that ABC could be counted completed. And when you deal with a corrective move, let's go step by step. I'll show you how you can do it by yourself. So step 1, because we want to find where a corrective wave B up may top, our main tool is retracement ratios applied to preceding drop. So that was the first leg down. It's subwave A of 4. We are trying to find at the top for subwave B of 4. Subwave B is always a corrective move. It's a reaction to the first drop in subwave A. So that is why we measure the distance covered by the drop and we add retracement ratios. We use several common ratios and they are here: 50%, 58.6, 66.7. You can see that at this point the market has reached 50% retracement. What it means is that essentially market was able to retrace half of the drop from the top made in February until the bottom made in March. Step number 2. We pay attention to major moving averages like this declining 50-day moving average, which is shown in green line. Not because that line has any magic meaning, but because so many traders watch it. You can see that at that moment, that line, that location of that line is perfectly aligned with the next retracement level, 58-60%, which is located around 28.90. Step number 3. Because this corrective wave, parenthesis B, we label it in parentheses just to show how big is that. It is subdivided, it is structured as ABC. Itself, it's a zigzag, so we play bigger zigzag, but every move inside the zigzag could be itself a zigzag. You see, ABC was the first move down. Now we need to get ABC of a counter trend of a move in the opposite direction. That would be subwave B. We would label it as B in parentheses. Because in every zigzag, those subwaves relate to each other in a certain way under certain ratios. We can measure the first move up in subwave A. We can project it from the bottom of B, and we apply 3 common projection ratios: 76.4, 100%, 123.6. Here we see that on Thursday, subwave C managed to tag the bare minimum extension, 76.4%, and that could be enough to consider it topped. Those 3 extensions are perfectly aligned with those 3 retracements, and those 3 levels are very highly probable reversal zones. But we will be adding additional micro-analysis to understand what could be, which one of them could trigger a reversal. We look for confluence of targets derived by different methods. Step 5, very important. All those methods we have just discussed, we give you only preliminary targets. To be able to come up with an accurate forecast about the exact reversal zone, we need to do micro-counting. What is micro-counting? I told you that we are getting ABC up, and the final subwave C, the final segment, which is highlighted in yellow box, normally should have an impulsive structure. It should have 5 waves inside the structure, and that structure is much easier to focus because those waves inside that 5-wave up fractal are related to each other in with specific ratios, and those ratios are much more stable than ratios between legs in ABC corrective structure. So to come up with an accurate forecast for potential top of wave B, we are talking about a potential top of the whole pullback which started in the middle of March 2020. We need to start microwaves. I highlighted here a similar pattern. When we got the first drop in February 2020, we got a similar ABC up of a lower magnitude, of a smaller size. It was still important. The great thing about the harmonic Elliott wave theory that we keep playing, we keep working with the very same fractal, and that fractal can be applied to very different time frames, from 1 minute to 5 minutes to hourly to 4 hours to daily, monthly and weekly. So you can apply the very same fractal to moves of different magnitude. It only depends on your personal preference and type of a move you would like to trade. And you can see the actual chart. It's ES Mini 3000 tick bar chart, updated in the morning on March 3rd, and we were dealing with subwave B up. you see, it's also subdivided into a bunch of 3 move waves, and that was ABC and another ABC, and that final subwave C was structured as a 5-wave up fractal, and that led us to pinpoint the exact top of that move. Here I posted for my subscribers, yes, one more push higher would complete a microstructure of the whole bounce. I meant that whole bounce would be completed by the final move up, and that was the target, 3124, that was posted at 8:35 a.m. in the morning. By 10 o'clock in the morning we got that very strong push up. And this is the moment when FOMC announced surprise rate cut. Many people considered that as a breakout because my subscribers were forewarned in advance that we only need that push up to complete that whole corrective structure. So that 3124 was a great point to go short. And as you know, just a couple of weeks later, S&P 500 dropped to 2,200. So that specific technique helped me to pinpoint the exact top, and because we knew that fractal, because we have been following that fractal, not only we knew that we need to short here, we knew that another very strong impulsive drop is coming, and the drop would go much lower than that low made around 2840 in February 2020. Why I'm showing it to you now? I'm showing it to you because I'm gonna use the very same technique, micro counting of the very final rally in a corrective ABC structure to pinpoint the top of the rally we are watching now in April 2020. If you want to know about that particular case when we nailed the top, I would recommend you to watch my video lesson. I have 2 video courses, and the very final lesson was called ES Mini, how to nail the top of a complex corrective wave B up. Every time I record a new video lesson and I add it to my video courses, I post it for a week for free, available to watch on my website. So to watch that video for free, you go to Education, Video Lesson of the Week, and here you see that video lesson. First, you have a brief introduction of the ideas I'm gonna explain in the video, and this is the video. You just click it and you start watching it. You can see below previous lessons I posted. There are so many of them, there are dozens of them, and there are about 200 video lessons in my 2 video courses. And if you want to watch those previous video lessons, you can easily do that. You just go Education, Beginners Video Course, and here you will see a link where you can subscribe with a discount. Once you finish that introductory video course, I would strongly recommend you to take my second advanced video course. I use the introductory video course as foundation. I show you a lot of tricks I personally discovered by trading in this market and applying the Elliott wave theory. And I show you how you can use those fractals and rules in trading, including how to spot a minion trading setup, how to enter a trade, how to set stops, and how to define targets. Again, you pay only once. All the prices I show here, it's a lifetime price. All those videos are posted on the largest educational platform in the world called udemy.com, and that platform allows you to use their app on smartphones and tablets and to download the whole course and watch it offline. And remember, every single lesson has a PDF file, so you can download it, you can print it out and see my detailed explanations, my takeaways from each lesson. Let's come back to the main topic of this video. We are trying to catch a top of that ABC move up, and as you can see, on Thursday at close, ES Mini managed to tag the very minimum 76.4 extension. It still can go a bit higher, but you can see that we have a supply zone. This is a long week of a failed bullish pullback here. So there are a lot of orders were left unfilled here, and this is why that supply zone created additional resistance, and this is exactly where it tapped on Thursday. In addition to that, you can see that this is where 50% retracement of the whole drop of February 2020 top is. But we still can expect that the market still could squeeze one more push higher, for example, to 2880, 2890, because this is where another much less known but important retracement fib is located, 58.6%. I'm gonna show you again the same fractal, and this is what I do for my subscribers. I highlight the part of the fractal which has already played out, so we would better understand where the market is now and what to expect next. And as you can see, we are very close to the top of that corrective move up, and once we get it, we could get another strong move down, which would have an impulsive structure, meaning that would be strong and powerful drop, which would most likely make a new lower low under the low made in mid-March 2020. This is another very interesting point I'm gonna make. This is ES daily chart, covering the period from October 18 until April 19. Why I'm showing it to you now? Because in 2018, we got a similar drop, which was also structured as A down, B up, and C down, and it bottomed in 20th of December 2018. Look what happened then. We got the first push high, and it was also structured as ABC. Let's zoom in. You see, this is the same fractal. December 2018, first push up, retracement in subwave B, another push up, but look what happened. The second leg up in subwave C or wave 1 could only stretch to 76.4% extension of the first leg up. So 76.4% extension is not that unique, and there are many cases when the second leg up taps being shorter than the first leg up. But look what happened then. It found a really strong resistance here. So it tested it once, tested it twice, tested it the third time. But from two last tests, from the second test and third test, we got very strong rejection, bearish reaction. And here you see 41.4. What it means is that if we measure the whole move up, a market retraced 41.4% of that move. Many traders use 38.2% retracement. It's an all-day retracement, and in fact, market nowadays like more 41.4. Not many traders know that. This is my trick, you now get it. Let's now look at the chart of SPY. This is SPY 30-minute chart, sorry for my typo here, and you can see that it has the very same ABC up structure in the making. Again, that was a large ABC down, that was the first leg down in subwave A of a large corrective wave 4. Now we need to get a completed ABC move up, and as you can see, on Thursday, it has tagged my red target box. Remember, I showed you at the beginning of this video that on April 2nd, I posted my forecast that S&P would go to 2780, and this is exactly where S&P arrived on Thursday. It does not automatically mean that the market topped on Thursday, but it's possible. My preference would be to see the market to stretch a little bit higher. We have tagged 76.4% extension of the first leg up, and it would be great to get tested 100% extension around 288. It's very important all the time you are looking for some area where market can top to come back in time and to check what are major pivots that managed to stop big swings in the past, and here we have two of them. I highlighted them with those red arrows for you. You can see the first leg down in subwave A stopped at around 289, and look how strong was a rejection of that support level. And what makes it even more important, that a week later, the very same 289 level became a very strong resistance. You see, it got tested twice from below and it got a very strong rejection. This is where the market just collapsed after failure to get over that level. So that level is still significant, and that level could become a very strong resistance on the way up. The next question for us would be, okay, if we nail the ABC move up of the low, where we should expect the first move down to find support? And in my opinion, we should expect it to come back down to retest the upper edge of that unfilled gap up. And that would be around 50% retracement of the whole move up, around 255. Now, very important point. When you trade ES Mini, you should know that in majority of cases, NQ Mini has more clean accounts. It's just simply more reliable. We are going to check charts of QQQ, SPY, and NQ. Let's look at the microstructure. I told you that subwave C has to have 5 microwaves. We got 1 up, 2 down, 3 up, 4 down, and now we need to get the very final A up, B down, and C up. And as you can see, as long as QQQ holds over support at 195, in micro subwave C of Z wave B, we should get another push high in a micro subwave C, which would push price higher to make another high. This is exactly where we would get 100% extension of that first move up of the low, and this is exactly where we have 58.6% retracement of the whole drop that started off February 2020 top. Now we have a very similar picture in NQ. This is NQ mini chart, tick bar chart covering period from March until April 2020. The very same story, A up, B down. We need to get C up completed. And to call it completed, it would be great to get that final subwave C of 5 a bit extended to 100%, at least to 100% extension of the first leg up. And again, we need to talk about potential support zone, because once it tops, we would need to know where the very first move down may find support. And in my opinion, it could find support around 8,000, because this is exactly where that swing up was stopped, and then the very same level worked as a very strong support for those two downswings. I want to ask you for a favor. Could you please subscribe to my YouTube channel? That would be very important for me. That would mean a world to me. I would really appreciate that. But I would ask you for one more thing. When you click subscribe, you get subscribed and you see that small bell. Just click that bell and you will be able to get notifications every time I publish a new video. In conclusion, I want to explain you one very important thing. Even if we nail that ABC up, you should not be concerned that the market would just collapse overnight afterwards. As you can see, after completion of that ABC up, the market should continue moving down, but it should move in an impulsive fashion, and that impulsive move down should first start from small ABC move down, which would be wave 1 down, followed by a pullback in wave 2 down, making a lower high. Even if you miss the very top of that corrective wave B up, most likely you will be able to enter shorts later after the first ABC move down. In addition to that, we cannot be sure that that quick ABC move up was all of the pullback. What we can get another drop down to the support we discussed earlier, and then we could get another ABC up. This is why it's very difficult to make long-term focus. I prefer to give you a focus for another week, and once we get that move, we can look at its structure and we will be able to make another accurate focus for another week or two. Thank you very much for your time. I really appreciate it. Please subscribe to my YouTube channel, and that would mean a lot to me. And please like this video. Have a great weekend. Bye.